And good morning once again, everybody. To all the new options traders out there, we've had quite a few joining our group. It's great to have you here. And a question that I get a lot, especially from our new traders, is what is the difference between P&L day and P&L open? These are some headers that you'll see on a lot of brokerage platforms. So for instance, if you look over in Thinkorswim, so if you look up here along these tabs, you'll see the monitor tab, and look right down here, there's P&L open and P&L day. So this is what we're trying to figure out. What do these terms mean? Well, they look kind of cryptic, but they're actually very easy. And here's how you make sense of them. Well, they're very simply just trading terms, and P&L day means your profit and loss for the day, and P&L open means your profit and loss since you opened the position. So for example, let's say this is our brokerage platform, and we just opened up a brand new position. We bought this $100 call for $3. This is our opening trade and therefore our opening price. The next day, the call closes at $3.50. Here's what you're going to see. Your profit and loss for the day will be $50. And that's because the position increased by 50 cents for the day. You have one contract. If you had two contracts, it would show plus 100. It's just showing you the total increase or decrease in your position in terms of dollars for the day. Now in this instance, the P&L for the open is going to be the same because it also increased by 50 cents or $50 in total because each contract controls 100 shares. So it increased that since you've opened the position. Next day, the call closes at $3.75. P&L for the day will be $25. It increased from $3.50 to $3.75 or $25. P&L for the open, however, will be $75 because it went from $3 to $3.75. Next day, the call closes at $4.75. P&L for the day will be plus $100, and that's because it rose from $3.75 to $4.75, a full dollar or $100 in total. But P&L for the open will be $175. You're up $175 since you've opened it. You paid $3, it's currently $4.75. Now here's where it can get a little tricky. If you start getting decreases intraday, but you've got gains, let's say since you've opened it. Let's say the next day the call closes at $4.50. Now your P&L for the day will show minus $25 because it fell from $4.75 to $4.50. That's a drop of 25 cents or $25 per contract. Now again, if you had two contracts, this would show minus $50. If you had 10 contracts, it would show minus $2,500. It's just showing you the total gain or loss. But over here, your profit and loss since you've opened the position will be plus $150 because you're up from $3 to $4.50 since you've opened the position. So the P&L for the day and since you've opened are just simply showing you the net gains or losses either for the day or since you've opened the position. It's really just that simple. Now obviously we could get the opposite effect. If you were down overall, you could see negative numbers over here in the opening column, but positive numbers for the day. But regardless of what's happening with those profits and losses, it's nice to know what's happening day to day or since you've opened the position. And that's why we use those headers as options traders. So I hope that helps to make more sense of those terms. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.